Hello A plus traders, welcome again to our YouTube channel. Today we are going to discuss the best ways to grow a small trading capital or a small trading account. You have been wondering, how am I going to make it in Forex with just my small trading capital? So today I'm going to share with you about four tips and 4 guidelines, and if you should follow these guidelines, I assure you, you will not lose your trading funds. You grow your small capital from $1, $2, $3, $4 till whatever your trading goals are. But before we continue, I want you to subscribe to our YouTube channel, A Plus Trading Help. So just go to YouTube and type on this search bar A Plus Trading Hub, and you see our YouTube channel and you subscribe to our channel. So let's begin. The first thing you need to do if you really want to grow your small trading account is for you to create a trading plan, and you need to be disciplined in trading it. Before I continue with this, I want you to understand something. When I'm talking about a small trading account, I don't mean a $5 account. I don't mean a $10 account. I'm not even talking about a $15 account. I'm talking about $50, $100, and $150, $200, $300, $500. This $500 below, this is what I call a small trading account. So if you fall between this category, here is how you can actually grow this small trading account, and here is how you can actually double your trading account. One, you need to create a trading plan. In trading, your trading plan is like a business plan. Trading is a business, so just like every other business, you need a business plan. So this business plan includes your sales strategies, your marketing strategies, and also your delivery strategies. So also in trading, your trading plan should include all these strategies, the techniques, the times you should be trading. Also infuse your trading goals inside your trading plan. If you want to learn more about trading plan, and if you want to actually know the components which I use to create my successful trading plan, which I've used for over 3 years now, you need to enroll for a Pro Traders course. And if you need more details about the Pro Traders course, all you need to do is click the link below this video, and it's going to take you to some information and some steps on which you need to take for you to access the Pro Trader course. So first, make sure to have a trading plan and be disciplined in trading it. For example, let's say your trading plan says you are not going to trade NFP, and all of a sudden one Friday, it's a Friday and it is NFP, and your body is doing you somehow for you to just jump in and trade. That is you going against your trading plan, and if you should continue like that, you are sure going to lose your trading funds. So never you go against your trading plan. Let me even give you a small gist. There's this student of mine. I don't want to mention his name because he might probably be watching this video too. So he came to me. He was on our training program for over 3 months, and he was doing well. We created a trading plan for him, and he funded his account and started trading. After like 3 weeks, he came to me and was like, "Boss, what is happening? My trades are not going well again. After the first few days, I started trading live account." I was like, "Okay, let's review your trading. Let's see what's really happening." So as we were discussing, he was like, "Wow, I just realized I've been going against my trading plan." So that is what will happen to you if you are going against your trading plan. I hope you understand what I mean here. Alright, so the next thing you need to do to grow this your small trading account is to focus on the higher time frames. Now, avoid trading the 5 minutes, the 1 minute, the 15 minutes, or even the 30 minutes time frame. If you have a small trading account balance, focus on the higher time frame, maybe 1 hour, 4 hour, daily, weekly, or monthly, as the case may be, as depending on your trading style. But make sure you are trading off the higher time frame, because the lower time frames are very volatile. So if you take trades from the lower time frame, there are higher probabilities that you'll be stopped out from your trades. So, and this is not good for you. You don't want to be stopped out unnecessarily on a trade, or else you risk losing money. So focus on the higher time frames when you are trading with your $50, $100, or $300 account. Number 3, don't trade correlated pairs. Now, correlation is simply trades that moves in the same direction or in the opposite direction. For example, when USD JPY is buying, if you look at your chart, gold will be selling. Also, if Euro USD is buying, USD Swiss francs will be selling. So these are all correlation. Sometimes if Euro USD is buying, Pound USD will be buying, and in some cases AUD USD will be buying, and NZD USD also will be buying. So these are all correlation. So for example, if you are buying Euro USD, you need to avoid buying Pound USD too, because if you are buying the two of them, that means you are taking a double risk on your account. So avoid trading correlated pairs. Better still, what you should do is that take one trade at a time. For example, you buy Euro USD now, you need to wait until price moves in your favor. Then you set BE, like break even. You set break even by moving your stop loss to your entry or a little bit above your entry. So you set BE. In case price tries to revisit your entry, you'll be stopped out and you will not make any loss. Rather, you may make few cents or dollar. So avoid trading correlated pairs. The last step is avoid trading highly volatile currency pairs or commodities. Now, to break down this English here, highly volatile currency pairs, I'm actually referring to currency pairs or commodities with wide spreads that are more than 30, 40, 50. Especially fast moving pairs and exotic pairs like USD ZAR, pairs like USD Mexican peso, USD Turkish lira, even USD Singapore dollar, and USD JPY. It also has a huge spread. Euro NZD has a big spread. Which other pair which I'm skipping? There are so many. So what I'm just trying to say in essence is avoid trading currency pairs or commodities that the spreads are very wide and big. Yeah, I remember one, like oil, like gold, like silver, like Nasdaq, right? So you avoid trading these currency pairs that have a very wide and huge spreads, because if you are trading these currency pairs with huge spread, the value per pip also is very high. So once price just hits your stop loss, maybe a stop loss of let's say 50 or 60 pips, it may wipe off your entire trading account. These are the guidelines or rules you need to follow to really, if you really want to grow your small trading account. So if you follow these guidelines, I assure you, you will not blow up your account. Rather, your account will be growing. You will be a profitable trader. But don't carry that mindset of you want to use a $50 and make up to $300 within 1 week or 2 weeks in trading. It is possible, but it is a very bad and wrong trading goal. You remember, we talked about trading plan. So you set good trading goals and you infuse it, you make it reflect on your trading plan too. So follow these steps. It's just 4 simple steps. Create a trading plan and be disciplined in trading it. Focus on the higher time frames. Don't trade correlated currency pairs or commodities. Avoid trading highly volatile currency pairs or commodities. If you stick to this, I assure you, I guarantee you your small trading account balance will grow day by day. Alright, so that is what all we can cover on this particular tutorial. If you like this video, like the video, and don't forget to subscribe to our YouTube channel, A Plus Trading Hub. And if you want to learn more about entries and exits, and about the trading plan, and about risk management, don't hesitate to click the link below this video and you get access to these tutorials too.